Well, we're back with you to take a look at our ag commodity trade. Brand new information just hot off the press here. It's our new ethanol production numbers. Let's take a closer look at what we had this past week. Well, for the production last week, it actually ramped up a significant amount. It actually came up about 31,000 barrels a day. The total now stands at 1.051 million barrels per day. That compares to 1.02 million a week ago at this time. 4-week average is now 1.057 million barrels a day. The stocks actually declined a little bit, between 1 and 200,000 barrels, down to 22.7 million, and the imports remain at zero this past week, so no ethanol coming into the U.S. Let's talk about this firmer grain trade that we have seen so far this morning for the most part. Let's go talk with Scott Gecas. And he happens to be with Longleaf Trading in Chicago. He joins us right now. Hey, Scott, how are you?
I'm good. How are you?
I'm doing all right. So a firmer tone here in the grain markets right behind you there. How come?
Yeah, it's a little surprising, especially with the perfect bearish storm with soybeans. The only positive one across the board in all the grains is positive in wheat. Wheat had the Egyptian tender of 475 tons. It's the largest since March. You're still having the Russian taxes looming back and forth. They still haven't made any type of solid decision one way or the other. You know, the global production in wheat continues to decline. So I'm surprised that the wheat market isn't a little bit higher. We're definitely keeping an eye in that 520 area. We're going to be extremely bullish above 520.
What about on the corn? We have had such a sag in the corn prices here, and with the harvest well underway now. Of course, they're getting a break in parts of the northwestern corn belt due to heavy rain. I would imagine that most traders are of the opinion that, well, you always get some rain during harvest. I doubt if they're getting too excited about that.
Yeah, right, exactly. And the rain's definitely coming into a big factor across the whole states, especially with the corn market. The one thing that everyone is concerning is the yield levels. They're expected to see that around the 180, a little bit higher. We'll see how that's really going to play out going into the new season.
Okay, let's run through the prices for everyone. On the corn market, we'll start there, and we'll begin with that December contract. It is trading just fractionally higher, very quiet. It's up a half cent at 3.43 3/4 per bushel right now. The entire trading range all day, including the overnight trade, is only 2 cents wide, and we're about in the middle of it now. March corn up a half at 3.56. Let's take a look at our soybean trade, and up to the moment we have November soybeans trading 5.5 cents higher. We're now at 8.19 per bushel, and we have January 5 3/4 higher at 8.33 3/4. Let's switch over to the wheat market, where we've had a firmer tone quite a bit here this week. We have December Chicago wheat now 4.5 higher at 5.15 per bushel, and on the Kansas City market we had a higher tone there too, 6 3/4 higher on December. We're at 5.22 3/4. For those of you wondering about new crop July, it's up 6 at 5.58. And looking at our Minneapolis wheat, we have December trading 5.5 higher at 5.85 3/4. The cotton market this week has had kind of a tough go at times, and right now December is trading 29 points higher, but still at 78.81 cents per pound, still under that 79 cent mark. We'll come back in a moment here, Scott, and find out the latest action in our cattle and hog trade as well. We're talking with Scott Gecas. Don't go anywhere. We'll be right back. Well, thanks for joining us today. I'm Marlon Bowling. Now we're going to take a look at your dollar value and the crude oil as well, just to get you updated on the financial and energy markets here. The December futures on the U.S. dollar index are just a touch weaker here. We're down about 50 points. We're at 94.170. The March is actually 30 points higher, but it's already at a discount to the December. And if you look at the crude oil market, that has kind of been in a tizzy here the last week or so with the hurricane impact on the southeast U.S. Right now, it's firming up again today. We have October West Texas Intermediate crude trading 56 higher at 70.41 per barrel. So keep that in mind. Let's go back to the trading floor in Chicago and go back to our conversation that we have going on with Scott Gecas. He's with Longleaf Trading. And Scott, on the livestock trade, A lot of traders talking about the cattle on feed report that'll be coming up in a couple of days from right now. Be after the markets close up on Friday. What's the talk on the floor about that?
Yeah, I mean, everyone's going to be focusing on the cattle on feed report. It's expected to be up about 5% versus last year. The big thing is we're still running into that short-term supply concerns. Fourth quarter production is already up 6%, so we're definitely going to keep an eye on that. You know, traders are still net long. They are decreasing contracts a little bit. We're going to keep an eye on that 112.5 level as a key support level in the short term.
Okay, let's take a look at our futures. And on the live cattle board right now in Chicago, we'll begin with the October contract, which has gone flat, unchanged now at 113.22 per hundredweight. Now it's down a dime. And we have December down 3 cents at 117.95. This thing has been on both sides of unchanged. It seems like about every other time we check it today. February up a nickel at 121.90. On the feeder cattle trade, we'll take a look at that October contract there, and now it's 38 higher at 158.40. We had dipped as low as 157.35 early today. Right now we're back within 20 cents of our high of the market day, and November up 53 at 158.35. Lean hog trade, now this has made some big moves over the course of the past week. Right now things are kind of simmering down. October lean hogs are 32 higher at 59.50. However, December down 88 cents. We're at 57.10 per hundredweight, and that is well off our earlier high by about $1.35. So, Scott, we talked about the cattle on feed report coming up on Friday, but what's driving this hog market here today, do you think?
There's nothing but bullish news in the hog market in general. We switched from the African swine flu, which is continuing to spread. They cannot contain it. Still seeing more and more cases in China as well as Europe. So that's definitely one of the driving factors. And then you also have Florence. The effect on Florence, it already has affected 5,500 hogs. To put that into perspective, when Gordon came through, that only affected about 2,600. So it's almost double that. So that's definitely a big factor in that. We're going to see how that market is going to be affected as soon as the plants get back up online and start running. But right now we're eyeing that 55.5 as that short-term major support. Above that, we can expect for a little bit bump up. Below it, you can expect for a little bit push down.
Waiting on the news coming out of there for confirmation. All right, thank you very much. Appreciate it, Scott. Scott Gecas with Long Leaf Trading, and he's located right there in Chicago.